makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here with special coverage from the IMF annual meetings in Marrakesh, Morocco. Now, coming up on today's program, President Biden speeds up military assistance to Israel, but Turkish President Erdogan criticizes the U.S. for sending warships to the region as the combined death toll tops 2,000. Treasury yields dropped by some of the biggest margins in the year on hopes that the Fed could be done raising interest rates. And we also look at luxury LVMH slumps on disappointing third quarter sales, more evidence that post-pandemic luxury boom is waning. Now, we'll also have some top interviews this morning. This hour, we'll hear from the annual meetings of the IMF and World Bank. We'll be speaking to Gita Gopinath, the first Deputy Managing Director of the IMF, as well as South Africa's Reserve Bank Governor, Lesetja Kganyago. Now, let's also take a look at the European markets map. A lot of the focus, of course, is on a lot of the luxury stocks. Now, European stocks have stalled after clocking their biggest gain of the year. That was yesterday. There has been some disappointing corporate news, and that seems to be tempering optimism about the outlook for interest rates and economic stimulus from China. Again, investors today will definitely be watching for any hints that the Fed minutes will suggest the central bank may not follow through with the last hike indicated in its economic projections. So watch out for Fed minutes a little bit later on. Now, to put all of this together, to talk about inflation, some of the pressures on central bank and world growth, we're joined by Ayhan Kose, the Deputy Chief Economist of the World Bank. Thank you so much for joining us. There's so much going on, and I wonder whether, foreign affairs and actually the bloodbath that we've seen over the last 6 days, we always think of the loss of life, but what that means for the way that the world is headed economically.
Thank you, Francine. And of course, horrific events in the Middle East, human toll is very large. That should be in our minds going forward. When we think about the economic implications, it's still early to basically say something concrete. Obviously, we might see some movements in oil markets, especially if the conflict spreads. There could be broader repercussions, but it's too early to basically make a estimate of how this will affect global economy. One thing is clear: we knew that geopolitical tensions were there. It was a major risk. We did not expect erupting in Middle East, but it did happen.
Do you worry that geopolitics, once again, could actually take the forefront of what the world is living through? There seems to be many possible shocks around the world, and is it just a matter of seeing what's next?
I think geopolitical tensions already have taken over. Great power rivalry is there. We see that in the context of trade. We see that in the context of investment networks. And of course, you have war already in Ukraine, Russian invasion, and now you have war in the Middle East.
What does this all mean for trade and economic growth?
So far, global economy has done remarkably well, given these multiple shocks we have seen over the past 4 years. Having said that, global growth is slowing. We are expecting growth to be lower than what we saw in the prior decade. Give and take 0.5 to 0.6 percentage points. If you look at investment, the weakness is there. Interest rates are now in restrictive territory. That means real interest rates are positive. Let's don't forget those rates were negative in the 2010s. And of course, when you look at trade numbers, they are really worrying. Global trade is basically going through a trajectory, the weakest post-global recession recovery. When you look at over the past 50 years, global good trades is contracting. Services are okay, but that's also coming down. All in all, the picture on the trade and investment side is really worrying.
Do we underestimate the impact that these higher interest rates have on the viability of certain projects? So the cost of credit, the cost of capital, and what this means for the emerging markets?
Obviously, we underestimate, given how weak the investment numbers coming out in emerging market and developing economies, and given that interest rates are going to be elevated going forward. In an environment you see the inflation coming down, real interest rates are going to be positive and going up. So the cost of borrowing is going to increase. We are in Morocco. growth in Africa region per capita this year is close to zero. So all in all, we need economic growth, and that growth has to come from somewhere if it is not coming from investment.
Where's the growth going in China? Again, this has been one of the linchpin questions that we've had, and the impact that whether they grow less than expected, the impact it has for the rest of the world.
So in the case of China, we downgraded our forecasts for this year as well as next year. And we are really worried about recent developments in financial markets, especially during the past 2 years. The hope is that we know Chinese authorities have the power, have the space to intervene, and if necessary, aggressively. And so far, they have been very careful how they approach the financial market problems in the property sector. But we are hoping that in the coming months, they are going to be even more aggressive in their interventions. China is very important, especially for commodity exporting economies. And given these geopolitical tensions materializing, in that space, we might see even more volatility.
But are we entering a new phase of deglobalization also because of geopolitics?
When you look at the diversion of trade from China, when you look at how countries are trying to, in a sense, bring back the supply chain, and they are trying to be very careful how they orient their, foreign direct investment, there is retrenchment. We don't want to say, outright deglobalization, but all of these are happening in an environment. We need more cooperation. We need more countries working together, given the global challenges, and that's really worrying.
I mean, if you're an economist, what also really worries you is stagflation, right? Which is extremely difficult to put to one side. Is Europe definitely going to be in a stagflationary environment?
Recent inflation numbers in the context of Europe have been, quite well, I would say. And financial market gyration took place in the United States, but that have global implications in terms of raising the cost of borrowing. ECB obviously in a corner, mitigating the kind of the inflation problem while trying to make sure there is no recession in Europe. The challenge is going to be during the next 6 months how the data is going to come and how the ECB is going to, in a sense, position itself.
But do you worry about complacency from central banks, or do you worry that they're too aggressive in trying to deal with inflation and that it will naturally come down?
The big challenge was at the beginning in advanced economies, central banks were kind of late starting the tightening cycle. But after that, they were very determined. And I would say so far, so good. So far, so good in terms of messaging as well. In a sense, the between all these risks, the desire to not to be very aggressive because of the impact on the real economy, we are optimistic. Today, the likelihood of soft landing is higher than 10 months ago.
And what's the level of coordination that you're seeing amongst countries? It's always extremely interesting to come to the annual IMF-World Bank meetings because you also see whether countries are working together or not.
Now, there are serious challenges. There is desire to coordinate. There is desire to collaborate. But that will require more than that. It will require implementation. And in some cases, it will require real funding on the table, given the huge development challenges. Our hope is that we will come out of these annual meetings with a very determined, clear roadmap how to reform these institutions, multilateral institutions, how to provide the necessary funding to cope with broader development challenges.
Thank you so much for joining us this morning. That was Ayhan Kose, the Deputy Chief Economist at the World Bank. We're also getting actually from Morocco, from Marrakesh here, where we are just a couple of hundred feet from us. Janet Yellen is speaking at her first briefing here at the IMF World Bank meeting. She says that they will meet the Chinese Central Bank governor. Now, this is the first time that we'll really hear from the PBOC governor in real life outside of China. Remember, he wasn't appointed that long long ago. Janet Yellen there at the press conference with many members of the press, including Bloomberg News journalists there, also saying that the U.S. is backing an EU windfall tax on frozen Russian assets. Of course, we'll be continuing to listen and to monitor to Secretary Yellen, and we'll be back with any breaking news shortly. Also coming up, the U.S. Secretary of State, Antony Blinken, is to travel to Israel. This as President Biden vows full military support. We'll bring you the latest, and this is Bloomberg. Lebanon's state-run NNA news agency says 2 missiles were fired from Lebanon towards Israel in the last hour. Now, the Israel-Hamas war is entering its 5th day, with the combined death toll approaching 2,000. President Biden says the U.S. is speeding military assistance to Israel following Hamas's assault over the weekend.
When Congress returns, we're going to ask them to take urgent action to fund the national security requirements of our critical partners. The United States has also enhanced our military force posture in the region to strengthen our deterrence, and we stand ready to move in additional assets as needed.
Well, let's bring in Youssef Gamaeldin, our Daybreak Middle East and Africa anchor. So, Youssef, what are the developments in the last hour?
Well, Francine, we have a confirmation now that a missile was fired from Lebanon towards Israel. The IDF put out a tweet saying it was an anti-tank missile. They say that it was launched from a small town in the south of Lebanon, and this is along the demarcation line between Lebanon and Israel called the Blue Line, which was established back in 2000. We also understand from NNA that they've struck back, so the Israelis have already fired back with artillery shells. And this border area is very, very tense. We understand that for Hezbollah in the south of Lebanon, an escalation with Israel would come if a ground invasion took place in the Gaza Strip. So this might be a little bit of a warning ahead of that as the IDF conducts more airstrikes in preparation for a potential ground invasion. I'd point to the diplomatic efforts as well that are underway. The Secretary of State from the United States, Antony Blinken, is going to be in Tel Aviv, is going to be in Amman. We understand they're leaning on the Qataris to try and play a bigger role. But then within the ranks of NATO, you've got Turkey, the President Recep Tayyip Erdogan, saying that the allocation of any U.S. military assets, additional ones in the Middle East region, specifically around Israel, is only going to lead to a massacre in the Gaza Strip. So we'll continue to monitor and keep you up to speed, Francine.
Youssef, thank you so much. Youssef Gamaeldin there with the latest developments. Now, the unfolding conflict is, of course, certain to dominate conversations here in Marrakesh at the IMF-World Bank meetings. We're joined by Arnab Das. He's Global Market Strategist at Invesco. I saw Arnab also yesterday. We were traveling together, so it was good to catch up, Arnab. It's been way too long, and if you look at the markets, they're a little bit all over the place. It's extremely difficult to, of course, trade geopolitics. But they're also latching on to what higher for longer, I guess, means.
Yes, absolutely. Look, I think the geopolitics, it's a lot of uncertainty. This thing came out of the blue. And I suppose at the best of times, it's hard to trade geopolitics in the short term. I think what you can do is take a step back and think about the bigger picture in the geopolitics and, as you say, in monetary policy and what all of that means. So I think these events probably put the Fed more on hold than otherwise. I guess, that was already the direction of travel, judging by the comments, somewhat dovish. I would say, taking the monetary policy by itself, the tightening in financial conditions that came from the summary of economic projections and the higher for longer, the Table Mountain versus Matterhorn kind of metaphor, that's one thing offsets the other, right? If financial conditions ease back, then presumably a bit of rate tightening comes back into the picture. The new war, probably tightens financial conditions over time through oil, through potentially general risk off, because there might be more countries drawn into the conflict, as you're sort of starting to discuss about Lebanon.
So, Arnab, do you think overall we're near peak rates? And actually, even at like 5.5, let's say 6%, if they were to hike more across the world, what breaks in the markets?
Look, I think we are sort of at the peak in rates. I'm sort of more in the kind of plateau camp rather than this kind of idea of a peak. I would say things are less likely to break, famous last words, right, this time around, because I don't think there's been the kind of extreme leveraging up that we tended to have when we had very easy monetary policy from the Fed and others. I'd say we had zero rates and negative yields in many places because there wasn't much leveraging up, right? So I think the chances of breakage are different now and probably somewhat lower than in past tightening cycles. I think we've seen this small regional banks in the U.S., but those were interest rate problems they had, not credit problems, right? So, which I think is reflective of the fact that this recovery is sort of income generated and savings generated rather than a credit binge.
So, Arnab, you're a markets guy. What does this cost of credit and the fact that it's actually changing, and it could have implications for private markets and certain parts of, commercial real estate and things like that that could have been over-leveraged. But what does it mean for where you want to be invested in?
Look, I think you want to be, much more diversified than usual because of all of these things. Normally, you'd say, if we're heading into something breaking, if we're heading into a recession, if the curve has reached its peak, peak level, you probably want to be sort of increasing duration. And I think there's a good argument for that, but I think it's very unclear because of the resilience of the economy. So rather than concentrating your portfolio in a kind of recession-oriented or significant slowdown-oriented move, I think you probably still want to have some risk rather than be sort of tending towards a kind of doom and gloom view of the world, despite everything that's going on.
But how do you measure that risk? And I don't know what you do with China. So a lot of people are excited. We just heard from Janet Yellen. I think she's taking questions at the moment. She's, I'm told, at a university not far, actually, from where we are here at IMF headquarters. But it's the first time that we hear from the PBOC governor. And again, it's unclear how much they can manage this huge economy.
Well, look, I think they are sort of doing the right thing, in my opinion, which is to ease, but not to ease excessively, and not to sort of try to set off another or run the risk of setting off another big credit binge. So I would say, China, for choice, is probably a more bond-friendly environment than the West. And I think this is a case of this diversification, right? You have the two biggest economies, one sort of still at the early stages of an easing cycle, and the U.S. probably, as we're discussing, at the end of its tightening cycle, right? So you have two big poles in the world pulling in the opposite direction. It says to me, we've been in an environment where people have been, contrary to the theory of finance, right? We've been concentrating in the U.S., concentrating in duration, concentrating in technology. That's what we've all been doing for the last decade or so. I think now it's time to spread your wings a bit.
So what does it mean for treasuries?
Look, I think treasuries would probably, in my mind, we've probably seen the peak in yields. Maybe there's a bit more to come because of the resilience. I don't think I would, position myself to expect, again, zero rates, very low yields, negative yields in Germany. I think, we have too much fiscal, we have too much, supply chain stuff, a lot more capex physical for the transition, for the geopolitics, security, inequality, all these things. We're going to have a much more active sort of economy and state. So I think, yes, yields have peaked. I wouldn't expect, massive collapse in yields here.
Arnab, thank you so much. As always, Arnab Das, their global market strategist at Invesco. Now, coming up, we'll have plenty more, of course, from Marrakesh, including the IMF's Gita Gopinath and the South African Reserve Bank Governor, Lesetja Kganyago. They're coming up shortly, and this is Bloomberg. Welcome back. We're here at the IMF-World Bank meetings, and you're looking at live pictures of Janet Yellen actually speaking at a university not too far from where we are in the center of Marrakesh, taking a lot of reporter questions. I believe actually that's even our own Washington correspondent asking Secretary Yellen a question. Now, she's been speaking for about 10 to 15 minutes. Of course, a lot of the focus has been on the U.S. economy, on China, and on geopolitics. A lot of the focus, of course, on geopolitics and the terrible loss of life in Israel and Gaza. Gaza. So underlying all the economic forecasts is a question: how does the Israel-Hamas fighting add to geopolitical uncertainty? Now, in the last couple of minutes, Janet Yellen has said that nothing is off the table. They're not taking anything off the table on Iranian sanctions. She was also asked a couple of questions on U.S. and the economy, saying a U.S. soft landing, not a sure thing, but a most likely path. Now, there is one person that we haven't heard from very much since he became PBOC governor, and he is here in Marrakesh at the IMF-World Bank meetings. Now, that will be extremely interesting. And Janet Yellen also says that it's one of the first times that they will speak face-to-face, when I think they meet just in a couple of days. A couple of other things that we heard from Janet Yellen is her talking, of course, about, again, Iran. She's still going back to Iran, saying that they have not in any way relaxed sanctions on Iranian oil. Now, we'll have plenty more throughout the day here from the IMF World Bank meetings. I'm also looking forward to our conversation with Gita Gopinath. We'll talk markets. We'll have a look at what we could hear from the Fed minutes a little bit later on. Again, if you put everything into context, it's a very complex world that a lot of participants here, a lot of finance ministers and central bankers have to unpack. We'll be right back, and this is Bloomberg. President Biden speeds up military assistance to Israel. Turkish President Erdogan criticizes the U.S. for sending warships to the region as the combined death toll tops 2,000. Treasury yields drop by some of the biggest margins this year on hopes that the Fed could be done raising interest rates, and LVMH slumps on disappointing third-quarter sales. More evidence that the post-pandemic luxury boom is actually winning. Now, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here with special coverage from the IMF World Bank annual meetings in Marrakesh. Now, Lebanon's state-run NNA news agency says 2 missiles were fired from Lebanon towards Israel in the last hour. President Biden says the U.S. is speeding military assistance to Israel following Hamas's surprise assault. Meanwhile, the U.S. National Security Council spokesman John Kirby says that there's no evidence to show direct involvement by Iran in the attacks over the weekend.
We have not lightened any of the sanctions. In fact, we've added additional sanctions, some 400 sanctions on Iran just since the beginning of this administration. And we're absolutely committed to full and total enforcement. Now, obviously, other nations have to enforce their sanctions as well, and certainly we talk with them about that. But the United States has not backed off on any sanctions. Quite the contrary, we've added and increased our enforcement capability.
Now let's pivot to the outlook for the world economy. And the International Monetary Fund has lifted its global inflation forecast for next year and called for central banks to keep policy tight until price pressures ease. Well, joining us now is Gita Gopinath, the IMF's first Deputy Managing Director. Thank you for joining us. There's a lot going on, especially geopolitics, that really have taken everyone and shocked to the world on both sides. What do these mean for the world economy or for countries in the region that could be particularly vulnerable?
Firstly, pleasure to join you as always, Francine. It's a terrible human tragedy what's happening, the Israel-Gaza conflict, and we really hope there's a quick, peaceful resolution to this. In terms of the economic implications, it's a little early because we have to see how this conflict unfolds, whether it draws in other countries. What we know, for instance, is that if it turns into a wider conflict, say, and that causes oil prices to go up, that does have an effect on the economies. When you look at the numbers, suppose oil prices, say, went up by around 10%, then about 12 months later, you see inflation going up by around 0.4 percentage points. Global output is lower by about 0.15 percentage points. So it can have these kinds of effects, but again, it's too early to tell exactly what's going to happen because we're still in very early stages at this point.
Are there any countries that you see as particularly vulnerable if it escalates? So we're talking about maybe Egypt or others that you're monitoring closely or closer than others?
I mean, countries in the region, like you said, are going to be more directly affected than the others. But if you look at what happens in terms of the effect on energy prices, that can become very widespread. And that's usually one of the big channels through which we see that affecting global numbers.
Do you think there's complacency amongst leaders in general about what kind of quality economic growth they get?
It depends on the country. We're seeing all kinds of countries in different places. In terms of our forecast, for instance, we have the US doing well in terms of resilience. Euro area, some countries in there, we've had downgrades. China, we've had downgrades. India, we've had an upgrade. So it's varying in different parts of the world. I think it's important for all governments to realize that we are in an environment of high debt, record high debt, very high interest rates that are going to stay high for a while. And therefore, it's very important to prioritize your spending, make sure that your revenues are keeping up with your spending needs, because it's not going to be that cheap to be able to finance just through debt.
There's a lot of, I guess, markets that believe central banks are almost, one and done, if not done yet. And it was interesting in your economic outlook in saying you have to make sure that inflation is under control. Is this the biggest risk to the global economy, that the central banks think they've won the battle before it's actually over?
I think central banks have done a good job in terms of raising rates sufficiently to be able to bring inflation down. So the question is not so much about whether they need to raise rates more. I think in many countries the question is about staying tight for a long time. It's going to take time. It's not going to happen overnight, that bringing inflation back to target. So while there's been good progress made on inflation, the job is not done. And therefore we are emphasizing that it's important for central banks to keep their eye on the data, calibrate appropriately, but make sure that you're bringing inflation back down to target.
When you look at the world economy and analyze it, financial conditions, of course, is a big component of it. Do you look at the cost of credit and financial conditions, or do you have preferred indicators?
We look at many indicators. We look at credit growth, we look at risk spreads, we look at different forms of pricing of risk. What has been interesting is that despite this very sharp increase in interest rates that we've seen, we haven't seen major risk-off events around the world, especially if you look at spillovers to large emerging markets. That has not been the case. I think they also deserve credit for having developed stronger a policy toolkit over the last couple of decades. So financial conditions have tightened. We saw some disorderly action back in March. Things are better now. But with interest rates at the levels that they are now, again, there's no room for complacency. You have to make sure supervision and regulation is up to speed.
There's a lot of concern actually about emerging markets and some of the global debt levels that we're seeing. Is there any action that they can do now to make sure that it gets better before it gets even worse?
Yes, it's absolutely critical for you to sit down and say, well, these are the kinds of expenditures we need to prioritize, and these are the kinds of revenues we need to make sure we get. Expenditures that pay for themselves are the best, which means you invest in education, in health, critical public infrastructure, that help also with the green transition. These things generate revenues that help you pay for it, and you don't have to rely on very costly borrowing. But there are countries that will require debt restructuring, and we've seen low-income countries who need to go through debt restructuring, and it's important to do that in a timely manner. We're making progress. The global architecture is making progress in getting these restructurings done, but still, it's not exactly where it should be. And that's one of the big aims of this week, is to be able to have a more efficient global restructuring process, debt restructuring process.
And there's an important roundtable actually on global debt restructuring. What are you concretely expecting from that?
Yeah, so the IMF, the World Bank, and the G20 presidency came up with the Global Sovereign Debt Roundtable. What the novelty of it is that we brought together Paris Club creditors, and the new official creditors like China, India, Saudi Arabia, private sector creditors, and the debtor countries around the table to discuss about how can we deal with technical issues that seem to slow the process of debt restructuring. I think we're building trust. We're coming to a better understanding of how we can do comparability of treatment. There are these technical details, but they slow things down quite a bit. We're going to be able to announce that we're making progress on several fronts. And this is important because it really complements the common framework, the G20 common framework, which is where you have the creditor committees. And this helps them end up with a more efficient resolution process.
Do you see more global coordination, or at least a wanting from a lot of these leaders to come together? I know that in the last 2 to 3 years there was a lot of people saying we want to come together, but then it was each for their own.
You know, I think we have conflicting forces, right? There's clearly a need for us to come together on debt, on climate. We need to trade. I mean, countries have to integrate. That has been a big, boon for countries around the world. But at the same time, we are in a geopolitical environment where there are disagreements, and so that complicates things. But one of the reasons we're all here is to have closer cooperation.
I guess a lot of these concerns that you lay out are also seen in trade numbers. Does it get worse before it gets better? I know we've talked about this for years, globalization or anti-globalization movements, but where are we?
If you look at the number of trade restrictions, Francine, we had 3,000 new trade restrictions just last year. That's like many multiples of anything that we have seen. So let's not kid ourselves. We certainly are in an environment where countries are placing more restrictions on each other. There are, subsidy wars in terms of who give, quid pro quo, tit for tat. We are seeing that happening in the world. We really should make sure that this doesn't end up with all of us, just turning inwards completely and a huge return to protectionism. We have to stop that from happening. Not going to be easy. I think it's important for us to have these kinds of gatherings where we communicate, we point out the risks, the costs to households and to businesses from these kinds of policies. Again, I want to stay hopeful that we can arrest a big decline.
Janet Yellen was also saying, so she's meeting the PBOC governor, the first time that a lot of people will get to meet him in person since he's been appointed. What are you expecting from China?
China is in a difficult situation with respect to their economy. We've downgraded their growth for this year and next, 5% this year and goes down to 4.2% next year. And in the medium term, we're looking at 3.4%. So growth is slowing, multiple factors. The property sector is an important one, the crisis there that matters. There's a lot that needs to be done. I will also be meeting the governor through these meetings and to learn from him about how he sees the outlook. They cut interest rates. I expect they will need to do more, but much more action needs to be done in terms of addressing the property sector problem.
Gita, thank you so much, as always, for joining us. Gita Gopinath, the IMF's first Deputy Managing Director. Now, coming up, Lesetja Kganyago, the Governor of the South African Reserve Bank, will discuss, of course, the country's persistent inflation and whether another rate hike this year is on the cards. This is Bloomberg. Now let's take you to Brussels and to NATO headquarters, where the U.S. Secretary of Defense Lloyd Austin is speaking at headquarters. He's addressing members of the Ukrainian Defense Contact Group and the line supporting Ukraine invasion, or Ukraine against the Russian invasion. Now, the Ukrainian President Volodymyr Zelensky is also at the meeting. He's actually on the left-hand side of the Defense Secretary. He comes ahead of a NATO-Ukraine Council later today, where NATO's Secretary General Jens Stoltenberg will speak this afternoon. One of the big questions, of course, that remains is if everything that's going on in Israel and the Gaza Strip impacts the war also between Russia and Ukraine. Now, inflation remains above target in South Africa, with food and oil prices driving upward pressure. Although interest rates are elevated, Bank of America predicts one further hike this year to rein in rising prices. Well, joining us now here in Marrakesh for the IMF-World Bank meetings is Lesetja Kganyago, the Governor of the South African Reserve Bank. Thank you, Governor, for joining us. We always have this biannual meeting to try and figure out what you worry about the most in your economy. What's inflation looking like?
Inflation is remaining elevated, although it has come down. It is at 4.8%. It went all the way to 4.7%. We would still want to see a number of readings that would suggest that inflation has declined sustainably towards our target, which is the midpoint of our target range at 4.5%. There are risks to the outlook, but we expect that we would only sustainably be on target in 2025. But as you were pointing out in your intro, there is a risk from oil prices, there is a risk to food prices with the possibility of an El Nino. Global financial conditions are tighter, and as a result of those tighter global financial conditions, there had been a repricing of exchange rates, and the South African rand was also no exception, and those remain a risks for us going forward.
But Governor, I think your last monetary policy meeting was September 21st. So since, have you had or seen signs that inflation indeed is going the way you want it, which is a trend downwards?
We haven't had a new reading since that. The most recent reading was the 4.8 that we talked about. The risks, the world is a very uncertain one at the moment. There are so many moving parts, and what I can say to you is the job on the inflation front is not yet done. And so we remain vigilant, and we stand ready to deploy our tools as necessary.
So what does that mean for interest rate hikes?
Well, what we should be asking is what it means for inflation, which is what we worry about. So we only deploy interest rates because we worry about the inflation outlook. And we have taken steps consecutively from November 2021, and July and August was the first time that we had a pause. And as I had said, the arrival of two swallows does not mean that the summer is here. We have got to see a lot more swallows in the sky, meaning that we must see a lot more inflation prints that are consistent with a declining inflation that converges to the midpoint of our inflation.
I understand, and you're right. And I understand it could also be frustrating for central banks to keep on being asked about monetary policy, where you're just looking at the reaction function of higher inflation.
Monetary policy is exactly the trade we apply, and so it's correct to ask us about a monetary policy, but we also do not have a crystal ball. We're faced with this uncertainty, and that is why when we say that we have paused, we think inflation is going towards the midpoint of our inflation target range, and we have had a pause. We had outlined that there are risks. Should this risk indicate that they could be materializing, we would then have to act to deal with that.
But Governor, you're far too clever not to have a hunch of what your next move is. Could it be a hike or a hold?
Well, I am 1 out of 5, so it doesn't matter what my hunch says. So
matters to us.
No, at the end of the day, it's going to be what our collective assessment is. There is going to be a number of data points that are still going to be read. We are only moving towards the mid of October. Our meeting is towards the end of November. So we have quite a bit of time. We would assess that and look at the outlook for both inflation and growth, and recalibrate policy as appropriate.
And of course, you'll have a chance to look at what the Fed does, which also has implications for the currency.
I thought the Fed looks at what we do.
Which they do, I'm told, by a reliable source.
No, emerging market central banks, to be serious, started the journey much earlier, and that has given us the room, and that is why where there had been downward adjustments in interest rates, it had been in the emerging market universe. That is not where South Africa is at the moment. We believe that the adjustments in policy that we have done so far have us at a level that is appropriate. There are risks on the horizon. We would have to continue to watch those. The Fed's decisions feed into what we look at, because they could, if they decide to tighten further, and our baseline is again higher for longer. But if they adjust and thus global financial conditions tighten, you are going to see a realignment of exchange rates globally. And at the moment, the dollar had been strong relative to so many of the currencies. And for us, we would watch that. And as we had said, one of the risks to the inflation outlook has to do with the exchange
Governor,
rate.
to put it simply, if the Fed hikes again before the end of the year, will it make it harder for you to stay on hold?
Whether we stay on hold or we adjust rates further depends on what our own inflation outlook is, rather than what the Fed has done.
I understand. What's your biggest concern out there right now in terms of multiple challenges to what you're dealing with?
Well, firstly, tighter global financial conditions. Secondly, that oil prices remain elevated. There are a lot of geopolitical risks that could impact on the oil price. Third, the threat of an El Nino could reverse the disinflationary path that we had seen with respect to food prices. And lastly, the tighter financial conditions leading to a depreciation of the currency, our domestic currency, could feed into inflation. And we constantly watch those risks. And again, if we think they would materialize, we will adjust policy as appropriate.
Governor, thank you so much for your time. As always, that was Lesetja Kganyago, the governor of the South African Reserve Bank, joining us this morning from Marrakesh at the World Bank IMF meetings. Now, coming up, we talk luxury with LVMH shares slumping after reported slower sales growth, driving French stocks to, well, down, to underperform. We dig deeper into the luxury story next, and this is Bloomberg. Well, trouble for LVMH. The shares are slumping following some pretty disappointing third quarter sales. Now, Bloomberg's Angelina Rasquet, who covers EU luxury goods, joins us from Paris. Angelina, good morning. So is this really evidence that the post-pandemic luxury rally is over?
Yes, indeed. It seems that the post-pandemic euphoria that we saw for luxury goods seems to be over. I mean, LVMH showed that demand was still up, but it's growing at single digits instead of growing at double digits. The question mark is now what happens to the rest of the players. Hermes reports at the end of the month. Generally, it's considered a resilient player because demand for its handbags generally outstrip its offer. Kering, it's slightly different because its biggest brand, Gucci, has a new creative director. He just unveiled a new collection last month in Milan. The products, his creations will only be on sale in February. So two different situations there for two luxury players.
Thank you so much, Angelina Rasquet, there with the very latest, of course, on VLMH. You can see LVMH down 6.5%. Now on to geopolitics, and Iran-backed Hezbollah says it's fired guided missiles towards an Israeli army post. Meanwhile, Lebanon's state-run NNA news agency says 2 missiles were fired from Lebanon towards Israel in the last hour. Now, the Israel-Hamas war is entering its 5th day, with combined death toll approaching 2,000. Coming up in the following hour, Bloomberg speaks exclusively to the former Bank of Israel governor, Karnit Flug. That's at 10:10 London time. We'll have full analysis, of course, also hear from the IMF-World Bank meetings, including our exclusive interview with the Citigroup chairman. That's John Dugan, and that's up shortly. Up next, Bloomberg Brief with Danny Berger in London, Manus Karani in New York, and this is Bloomberg.